Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Today, we are going to look at two rather ubiquitous companies listed on the Trinidad and Tobago Stock Exchange. Those would be Guardian Holdings Limited, as well as Republic Financial Holdings Limited. And we look at them to get indicators and pointers as what precisely is happening in the local equity market in terms of performance and in terms of stock valuation. Guardian, of course, 41% of its business is in Trinidad and Tobago, and Republic, over 50%, well over 50%, is in Trinidad and Tobago, but of course throughout the rest of the Caribbean. Republic does have an operation in Ghana, and there is some activity by Guardian in the Latin American space, though small. So let's start by looking at what's happening with the first company, Guardian Holdings Limited. Well, Guardian Holdings Limited recorded earnings of $1.12, as you would see, for the 9-month period ended 30th September. And what does that mean in terms of its performance overall? Well, Guardian, as you know, has been challenged for the past several years with its operations out of Europe. Those operations have been discontinued, and what we would see in the results as you look at the details is that the impact of discontinued operations, which would have recorded losses over several years for its European operations as well as the French Caribbean operations, now seem to be totally on the wane, and that seems to be out of the way. So we can get a clear look at what's happening with Guardian. You see that $1.12 earnings per share. Driven by what? In the main, as we go to our next graph, in the main, what you would see is that a big chunk of the income for the 9 months actually comes from an improvement in terms of investment earnings, its investment activities, rather than from its premium generating activities, its underwriting activities, which in fact has been relatively flat. You would see in the results that there appears to be some adjustment down, and that is because of a one-off gain that took place in the Jamaica environment, and that is not to be repeated. But what we have here is when you've had this significant reduction in investment income from in 2015, at the 9-month period, we see it up to 730. And that may camouflage somewhat what is happening in terms of underwriting and so on. Let's look now at what's happening, and I mentioned before, where does Guardian Holdings pull its revenues from? In the main Trinidad and Tobago, then of course its significant operations in Jamaica and the Dutch Caribbean. So what we see in terms of the operations of the company, in terms of the performance of the company, is that its share price has fallen to by 5.6% so far this year, and it has fallen to a level of $12.51, notwithstanding sales of ultimately a significant chunk of its shareholding to NCBG this year, which is something like 29.99%. What we have is, in the Guardian story, a story of investment income in terms of the various sectors. Let's look now at the generation by the segments. Of course, as we would expect, life and health is the biggest chunk of what has been happening in Guardian for the last several years. And this continues to be so, life and health, as well as property and casual, being the main generators of income by the various segments. What can we expect in Guardian, and what is the outlook for Guardian? Well, we have seen, this is Republic. So what I will say to you in terms of the outlook for Guardian is that premium income relatively flat. The investment side of the equation has been relatively buoyant, from 489 to 730 million. But yet still, we do not expect going forward that the investment income will continue to be buoyant as US interest rates are going up and TT interest rates are pushing upwards. And therefore, we would expect that the Guardian story would be somewhat stalled, or shall I say not so buoyant in the last quarter of the year. And then, as well, what the impact of Hurricane Matthew, has not been recorded as at the third quarter, and that will come into the fourth quarter. So we can expect some downward pressures in terms of Guardian, and we continue to hold a neutral position on Guardian, down 5.6% in terms of its share valuation year to date. Despite this, the PE multiples are attractive at 7.5%, but when you take all the other factors into account and the economic situation in Trinidad and Tobago, we hold a neutral. Let's go now very quickly to Republic. And very significant downside in terms of the earnings of Republic. This is a company that we have expected to show 3-4% growth in terms of earnings, as has been the case for several years, as you would see on your screen here. What's happening? And this should be September 30th rather than December 30th, December 31st. What's happening? Significant down shortfall in terms of income. Previous year, $7.42 earnings per share, now $5.87 earnings per share. Some of these have been caused by one-off adjustments, such as the adjustment to goodwill in its subsidiary in Ghana, HFC, as well as its share of losses arising from that company in the past year. So that these factors are there in the accounts, but what you will see is a significant shortfall. Even if you take off those one-off adjustments, Republic is still below this trend that you would have been seeing all along. It's still below at 687. So very significant fall off. We hold a neutral position on Republic, given that the economy does not appear or is unlikely to support very significant or buoyant activity, notwithstanding that the spreads for the company has been better because interest rates, that is deposit rates or their funding rates, continue to be very low, but the ability to increase prime as a result of policy changes have pushed those spreads up. So what we see is that earnings, if we go to the next graph, what we see is that the historical dividends, despite the fall-off, has been continued to be at 435 final payment, and as well as the interim payment has been at the 435 for this year. What's our outlook? Let's just quickly see that we again are neutral, and investors might be asking, why are we becoming neutral on stocks that would have been buy stocks over the past several years? And the reason is that the economy just is not given the kind of momentum in terms of outlook and performance. This is the Bourse report. Look for us in the newspaper for various mutual funds under the rubric Bourse or Save Invest. Look for us on our website at bourseinvestment.com, when we'll give you far more details as to these particular companies and our outlook and recommendations for these companies. Have yourself a wonderful investment week. This is Subhash Ramkilawan for the Bourse Report.